In this video, I will be going through Warren Buffett's investing strategy and how you can invest like him. Make sure you watch until the end if you want to know how to outperform the average investor. He is one of the best investors of all time, and he is worth $115 billion. But before we start, make sure to like, subscribe, and hit the notification bell. If you want to invest like Warren Buffett, you don't have to do anything extraordinary. In fact, many new investors are surprised by the simple investing style of the Oracle of Omaha. Buffett invests in great companies that trade below their intrinsic value, and then he holds the investments until they remain great companies. Of course, there's more to the story. In this article, we'll discuss Buffett's investment style, give some real-life examples of how he's applied his investment philosophy, and list the stocks he does and doesn't invest in. Warren Buffett's investment philosophy in 9 steps. A big part of Buffett's investment process is real estate, so we don't know exactly how he researches investments. But here are some of Buffett's most important investment principles that you can incorporate into your investment strategies. 1. Find a margin of safety. Favoring the margin of safety is a cornerstone of Buffett's investment philosophy. Simply put, margin of safety refers to the characteristics of an investment that help protect investors from losing money. For example, if a stock is trading at $10 per share, but the company's assets are actually worth $12 per share, the margin of safety is $2. The intrinsic value of the assets should prevent the company's share price from falling excessively. Buffett's goal is always to pay less than the intrinsic value of the company. As he says, too high a purchase price for shares of a large company can negate the impact of the next decade of favorable business. 2. Focus on quality. Warren Buffett doesn't invest in junk. You don't usually see him buying distressed companies, no matter how cheap they get. One of the best quotes from Buffett that new investors can use is, "It is much better to buy a great company at a reasonable price than a fair company at a great price." 3. Don't follow the crowd. Here's another piece of advice from Buffett that's very important to new investors, especially in this age of Reddit message boards. Don't buy certain stocks just because everyone else is. But don't always try to be contrarian and sell stocks that everyone else is buying. As Buffett does, the best way to invest is to completely ignore the public and focus on finding value yourself. He also says the most important quality in an investor is character, not intelligence. You need a character that neither of you really enjoys being with or against the crowd. 4. Don't be afraid of market crashes and corrections. The obvious goal of stock investing is to buy low and sell high, but human nature can compel us to do just the opposite. When we see that all our friends are making money, we feel that we should also try to make money. And when the stock market crashes, it's in our nature to get out before prices fall further. Buffett likes when stock prices fall because it creates opportunities to buy at a discount, which explains why 2022 has been particularly active. If you were shopping at your favorite store and suddenly discovered that the entire store was 20% off, would you panic and run? Of course not. 5. Approach your investments with a long-term mindset. One of the most important quotes from Warren Buffett about investing that you can take in is, "If you're not willing to own a stock for 10 years, don't even consider owning it for 10 minutes. He doesn't pick stocks just because he thinks their prices will go up this week, this month, or even this year. Buffett buys stocks because he wants to own these companies for the long term. He continues to sell stocks frequently and for various reasons, but he approaches most of his investments with the mindset of owning them forever. And if you can't get into a forever mindset with stocks, Buffett says one of the best investments most people can make is an investment like the S&P 500 index fund. 6. Don't be afraid to sell when the scenario changes. Warren Buffett's famous quote when asked about an investment he decided to sell at a loss is, "The most important thing to do when you find yourself in a hole is to stop digging." While he certainly wants to hold all the stocks he buys forever, the reality is that perspectives change. You might be surprised to learn that Buffett bought a large position in mortgage lender Freddie Mac a few decades ago. But a few years before the 2007-2009 financial crisis, he realized that the lender's management had begun to take unnecessary risks with the company's capital and decided to sell. When the financial crisis hit, it became clear that Buffett had made a smart move. 7. Learn the basics of value investing. Warren Buffett is widely regarded as the world's greatest stock investor. Value investing prefers a low price for investments relative to their intrinsic values. Basically, the goal of a value investor is to buy $100 worth of stock in a company for less than $100, ideally much less. Value investors look for and invest in companies whose intrinsic values are clearly higher than the company values required to trade the company's stock. Value investors like Buffett expect the market to eventually recognize the full value of an undervalued company, leading to an increase in the company's stock price and profits for the value investor. 8. Understand compounding. Warren Buffett is perhaps the best example of the power of long-term compounding. Buffett uses compound interest, dividend reinvestment, and continuous reinvestment of operating cash flow generated by Berkshire's business to his advantage. How powerful is it? Berkshire's average annual return since the year 1964 has been 20.1%, compared to 10.5% for the S&P 500. That might not seem too impressive until you realize that over time, it has delivered a total of 3,641,613% return to shareholders over time and only 30.209% for the S&P 500. 9. Research and reflect. Buffett regularly spends long hours at his office in Omaha, Nebraska. Investors are often surprised to learn that he spends most of his time just sitting alone, reading or doing nothing. He was quoted as saying, "I insist that I spend a lot of time almost every day just sitting and thinking." Buffett sees knowledge as something that compounds over time, and he believes that much of his success is due to accumulating as much investment knowledge as possible. So which stocks do Warren Buffett invest in? Here are some of his biggest holdings: Apple, Bank of America, Chevron, Coca-Cola, and American Express. Which stocks does Warren Buffett avoid? Buffett avoids investments he doesn't understand well. That's the main reason you won't find many high-growth technology companies or biotech stocks in Berkshire Hathaway's portfolio. They're not necessarily bad businesses or overvalued, but Buffett knows where his stock-picking strengths lie.